Time to have a look at the markets picture now. Asian stocks drifted with US and European futures after a rally in tech shares and treasuries yesterday. Investors unwound some of the dominant reflation trades. Investors also monitoring moves in the commodity space after prices fell sharply. Looking at what's happening in Japan, the Nikkei closed 0.1% lower. Mainland Chinese stocks closing mix in the hour of trade, with the Shanghai Composite marginally lower, while the Shenzhen component advancing 0.7%. Over in Hong Kong, the Hang Seng Index rose about 0.6% in its final hour of trading. Looking at what's happening on the European side, stocks were relatively flat as global markets digest a hawkish pivot from the US Fed Reserve. Then stateside, US stock futures inching fractionally higher in early market trade. To talk about various themes that have played out throughout the week, and of course that important FOMC meeting that we did have on Wednesday, we are joined by Warwick Lucas from Galileo Capital. Warwick, thank you so much for your time this afternoon.
Hello, and to the viewers, and my pleasure.
So, let's look at the JSE performance right now. How are we faring?
Okay, so the JSE has basically had a downhill week all week. I think we came off a previous week that had quite a lot of positive political and economic news. And in the week since, we've had a week with softness in commodities. And then, of course, locally, our extension of the lockdown putting a bit of a dampener, I think, on general sentiment.
About a week or two ago, we were talking about the Rand and how the Rand was doing really well. In light of what just happened with the FOMC meeting, the performance of the dollar, how's the Rand performing?
Okay, so I think whenever the Rand has a large move against the dollar, it's always important to take a context against what's it doing against other currencies. Now, it has been a little bit weaker against the likes of the euro and British sterling, but nothing like as much. It's really had the biggest move by far against the dollar, and that's because the dollar gets happy when commodities fall, and of course the Rand likes it when commodities get stronger. So the two will always be in a kind of a dynamic tension.
So looking at the FOMC meeting, some people saying that it wasn't particularly a surprising hawkish outlook, considering all the things that are playing out in the US right now, the data coming through. Were you surprised that the Fed reacted in the way that they did on Wednesday?
I think we could say we were always going to expect it because, okay, so economies are coming to a point of almost restart as opposed to just coming off a normal cyclical low. And this trade-off between encouraging restart growth versus making sure that you didn't let an inflation genie out of the bottle was always going to be a bit of a balancing trick. When we look at the guidance that's been given out by the Fed, it's basically they're talking about 2 interest rate hikes by the end of 2023. That's 2.5 years away. And the kind of rate hikes that we see the Fed pop out are typically in the order of 0.25%. So, that isn't a massive interest rate or inflation takeoff. It's really quite a long sort of glide path that we're talking about here. So the key is, can the Fed manage to facilitate conditions that will allow growth, but also not let inflation start going crazy?
So you have the world central banks looking to see how the Fed Reserve is going to react even further going into inflation. But when you take into consideration the pandemic chaos, what do you foresee in terms of how emerging market central banks might react in terms of their interest rates going forward?
I think most emerging central banks are, to a greater or lesser degree, in a similar kind of position where they want to also manage this trade-off. And I think in a large part, actually, some of that Fed guidance was not only to their own population, but other markets and other central bankers as well, saying that we're going to try and be as careful as possible about this. Obviously, emerging markets don't like it when you have aggressive hiking of rates in the US, because it then takes a lot of their own dollar-denominated debt and throws it into chaos. So they will be watching with great interest. Obviously, if rate hikes and inflation accelerate in the US, there will be a heightening of concern in emerging markets. But at this stage, I don't see that coming onto the table yet.
All right, Warwick, thank you so much for your time. That is Warwick Lucas from Galileo Capital, letting us in on what he thought of the FOMC minutes that came out on Wednesday, and of course, giving us a check-in on how the JSE is faring at this point. We're going to take a quick break.